The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, where the fall is setting in, soon to be followed by winter. Isn't it amazing how these cycles work? I've posted a really cool service that they have here at TFNN. David White and Tom O'Brien it's timing. I think it's called Timing in the Market, but it does these patterns, these Gartleys and butterflies automatically for you and sends them out so you can take a look at them. And the one we're looking at today is BlackRock. And there's a lot of history behind that company from my perspective, but it's at a perfect buy point. It closed badly. It looks terrible. Your risk here is so small that you're talking about a stock that's trading triple digits, and you can risk less than around 1% on it. So you got to risk about $2 at the very most. And but it's set up just absolutely perfectly. And if you don't want to buy it there, what you can do is you can wait to see when it starts to turn, and that'll give you another try. But it lines up these patterns, and when they hit these numbers, David and Tom send them out, and believe me, they've really got some beauties in there. This happens to be one that is set up just absolutely perfectly. So, and of course, the market is probably a little stronger today because we're just a tad higher this morning in the market. And remember, with the stock market, folks, we have been basically in this downtrend for quite some time. If you notice here, this is one of the things that I wanted to bring to your attention here. Here's the E-mini S&P. You can see what we had here over the last 10 days, since October the 12th, we've basically been in a downtrend, and it's been very, you can see how harmonic it's been the last rallies. The rally that we made yesterday was an exact 382 of the high that we made back on October 12th. That came in at 34.57 to the tick, and what did we do last night? We went down to 34.37, down 20 handles, and it was exactly a 38% retracement of the low that we made back on the 21st. And then, of course, we popped above that, which tells us the trend has started to move higher, at least for the short term. Now, those of you that belong to the 24/7 group, the Fibonacci 24/7, and also the few of you out there that are my students, you're going to get a special thing today. Later this morning, you're going to get a special video that is, to me, one of the most important things that I've ever looked at in the markets. And the second thing is that you're going to be looking at a 25-page paper from our friend Tom Hugard of Trading Tom. He has written 25 pages of the most incredible psychological stuff of why he's successful doing what he does. And folks, let me tell you, this thing is going to blow your socks off, and if you're barefoot, it'll probably put your socks on. I mean, it is the best stuff I've read since Mark Douglas. That's how good it is. And I was mesmerized, actually. But it's really spectacular stuff, and you'll get that within a day or two. He just has to tidy up a few things on how to, what his email address and stuff is. But it's really good, and I think you're going to enjoy it very much. He shares so much of what he does. It's really something, and it's all psychological. So it has nothing to do with the technical part. You're getting inside of his head for 25 pages. And, it's just really spectacular. That's all I can say about it, and I'll say no more. Boys and girls, we have a trade in play, as they say. Let's get this little puppy up. They have been feeding us a lot of cannon fodder here for quite some time. Let's get this up here. This is the United States of America, United States 30-year Treasury bond. As you can see, we have been in a downtrend since March the 10th. And we've had lower highs. You can see that strong resistance up there at the 61% retracement. We hit it 1, 2, 3, 4 times over a period of 4 months, and then we started down. We hit the key support at 173, and we told you that once below 173, you were going lower, and that's what we were looking for. We have now gone below the lows of June the 1st. And guess what, boys and girls? Here at the offices of Duke & Duke, everybody is bearish. All of our customers are willing to come in and sell Treasury bonds at these levels. Now, let's see what we're looking at here in the secret trading room here at Duke & Duke. Here you go, boys and girls. Take a look at this one. I don't know if you like things are like this or not, but this is the one that we talked about yesterday. This is a 3-drive pattern. You can see it right there. You can see the double ABCD pattern that you have. You can see the last 1.618 expansion that came in at 121.21. The low today was 121.22. Let's not say 21. Let's say 171.22 was the low. All right. And we were looking at the last price. It's around 172 and change. So that has completed. Now, we sent this out in the middle of the night, knowing that, because of all the stuff that's going on in these big places where they have big cities and like Washington and New York and Terre Haute, Indiana, you have a lot of things going on. So you got to look at these things in the middle of the night. One of the things that we're working at here in TFNN is to get these out even faster to you. In other words, so you'll get them immediately as I see them. You'll get them, and we'll hopefully have that done very, very shortly. And I'll be able to do more trades because I'm so darn risk adverse at my age now that I don't risk more than about $400 on anything. Sometimes, well, a little more in gold, of course, and crude oil, but the rest of them, you can trade for relatively an easy amount. So this is a really interesting one we have here in the Treasury bonds today, folks. If you haven't, if you're not involved, watch for a little pullback. You might be able to get them on a pullback. Maybe it's totally wrong. If you go below 71.10, you're absolutely 100% wrong. But until that happens, it looks like it's going to be okay. Now, there's so many of these patterns that are doing the exact same thing in Europe and also Asia and also here in the United States that something big is happening right about now. I know the election's coming up on next Tuesday, but something is happening with some of these things. We talked about these yesterday. Let's take a quick look here first at the German DAX. And as you can see here, we had this, you can see the big ABCD pattern right there. Look how perfect it is. It goes to the exact tick and it rallies up. What did it do today? It went right up to the 61% retracement, completing a 135 pattern. I mean, that's just amazing. But if you take a look at the one that we really talked about yesterday, because we were talking about a 3-drive pattern, was the FTSE. And look at this. We said that it was most probably going to go down and clean out all that stops. You see that blue line there? That's when we went below that. Look, when we went below that, what do? We made a double ABCD pattern down there to the exact low, 57.20, and it immediately rallies 150 pips. That's a lot of bread, folks. And even if you don't own a bakery, that's a lot of bread. 877-927-6648. Dr. David Paul at the break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we had a nice call in by the name of Jeff back east someplace in New Jersey talking to us about natural gas. The one that we're looking at up here, folks, is the November. You can see the 3 higher highs that we've made here in the November natural gas. And remember, these contracts they're staggered. So after November, they start, moving on to December. But if you look at the December contract, and that's what we're going to do right now, you're going to see a totally different picture. Because if you look at December, you're going to see the big ABCD pattern since March. I mean, that's just flat spot on. But look at this. We've had that's a triple top, folks. It really is. You could call it a triple top. You can't call it a head and shoulders pattern because the right shoulder is much higher than the left shoulder, but the pattern is there and it has the highest open interest. So this is the one that you would most probably be trading. So let's keep an eye on that. I think it's very, very important. Thank you, Jeff, for bringing that to our attention. But these patterns are certainly different. One has a 3 drive to a top pattern, which tells you that the overall fundamentals might be changing, but the December is taking more heat because people are willing to sell it. That's why you're seeing the triple top pattern as opposed to seeing the 3 drive to a top pattern. Remember, all of these patterns can be quantified, and that's what Dr. Andrew Lowe did in his book, The Non-Random Walk Down Wall Street. That's an important thing to remember. That book is about 700 pages of the most incredible formulas that you'll ever see, way above this old cowboy's pay grade. So anyway, that's what we're paying attention to today. By the way, we're going to have Dr. David Paul as our guest. He will be on in about 10 minutes. Always has some great information. Hopefully the technical things will be taken care of and we'll be able to look at it without too much trouble. We've got another thing that's rocking and rolling in the news, mainly because of what happened with PayPal yesterday. Our friend, these cryptocurrencies, you'll be able to take a look at it here, that we had a big, by the way, I'm going to have another paper written by John Jameson on cryptocurrencies made available to us here at TFNN, another spectacular paper, but I have to get some permission and stuff, but haven't got that yet. Anyway, you can see here, we had that beautiful support at the 61% retracement there in early September, right at the 61% retracement. And then, of course, it took off. And the key, of course, was at 11,700. Once we went popping above the 78% level, away it went. And we're going to be at 13.5. I think we're 13.5 this morning, as a matter of fact. I believe we're very, very close to that. So it's going to be interesting to watch this one. The reason why the strength is happening in the cryptos is the fact that PayPal has announced they're going to be accepting cryptocurrencies as part of their process. So that'll help get the things working. But that's so far beyond what we do here that we really don't have to worry too much about that. But let's remind ourselves that that's what we're looking at. Someone's asked a question about the E-mini S&P. Folks, we've broken above that really key level of 34. Let me get this up here. It's 34. Let's get it up here once. I think it's 34. Yeah, we went above the 34.60 level. I don't know where we're trading right now, but this market is bullish unless it takes out 34.35. If it takes out 34.35, that is a very negative. I don't expect that to happen today. I think this is a Friday. We got a chance to make this an up week. Very marginally, by the way, if it can do that. But the market has been oversold. Remember, we're down 10 days from the October the 11th, so the market is considerably oversold. So it's due for a rally, and we've got a Friday coming in, so we're going to see it. And don't forget, folks, they do have something happening on November the 3rd. I believe that's an election. Shut the front door, and yeah, that sure is. That's what we got to look at. We'll take a quick look at it. Wow. Hard to believe we got an election coming up. Okay. I've covered the Treasury bonds. That's the really key one, folks, because we've got to, if we go below 171 in the Treasury bonds, this cannon fodder and tapioca that they've been feeding us about negative interest rates is going to be put another name on it, malarkey, because that's not going to happen. These rates have been going up, not down. And they've been telling us they're going down, and they're not. So they're lying to us. And that's not unusual. The market lies to you all the time. But sometimes, you have to pay attention to what it's trying to tell you. And that's what we're trying to alert you to, that we are at the proverbial bottom line, end of the truth, whatever you want to call it, moment of truth here in these Treasury bonds at this 171.22. That is if it gets below 171.10, something is really seriously wrong, and you do not want to have anything to do, with the Treasury bonds at all. And that's the key. Now, let's take a quick look here at the currencies, because we had a nice little move here last night here. We've had a lot of resistance up here at this 118. Now, this is the December futures. And the reason why I watch these, let's just get this up here so you can see it here. We made a 78% retracement up there exactly at 118.74 to the exact tick. The risk on that is relatively small. It's started to move a little bit in the favor of the trading gods. And in fact, it's down about 12 or 15 pips. You could lower your stop, to keep it from going, to make it to keep your losses relatively small. But those are the main things. Now, the other one that was really interesting last night, and this is part of the special thing that I'm going to be doing here. I hope I can do this without. I think I can. Yes, I can. I think I can. Okay, here's what you won't understand the description on this, but I just wanted to show you the gold market. Those of you that belong to 24/7, you'll get the description and everything, and on the video. It's going to take me a little while to get the video prepared, but you can see the big ABCD that came down. We dropped. You see 36. We dropped exactly 40. We dropped $42. The harmonic number is 34, so we went a little below it. You said we went a tad below the 1.618 expansion there. Then we started to move. We had a rally up. That rally that we made this morning here at 1916, a perfect 78% level off of that high. that we made yesterday, 50% off the high. So the market is still negative bias to the downside. And Ruby's asking us, well, I'll take a look at hogs and cattle. You betcha, Ruby. Hold on one second. You're our number one go-to girl when I'm running out of things to say. And, I got to do this quickly because guess what? We have David Paul coming up. I hope I can get it done, Ruby. Give me a second here. I have to do it the little tricky way, layout, and then I go to this and put that there. And then all I got to do is find these little puppies and I shut the front door. And hogs, what do hogs start? Okay, we'll do the cattle first, Ruby. By golly, they got almost down to that level, didn't they? Yeah, hold on here. We get this up here to see it. I think the cattle are in a buy zone. I don't know if they reached that. Let me see if we reached 2 days. Nope, we haven't got to that 102. Let's see, where are we at here? Yeah, we need to get to that 102 level in the cows, Ruby. And I can't do. I'll post the hogs for you, dear, and then we'll have David on at the break. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I believe we have Dr. David Paul on the line from over at the UK. Are you there, my friend?
Yes, Larry. How are you, sir?
I'm good. Okay. David, I don't know if you had a chance to read the 25-page article that Tom wrote, but it's really something. You should ask him for a copy of it because it is, he just finished it, and it is really spectacular. I mean, you did a great job with that, boy. You should put a gold star on his report card for sure. Hey, go ahead, my friend. We're waiting to hear what you have for us because you've been friendly to this market for quite some time, taking nice profits. So you've got the mic, and please go ahead. Dr. David Paul.
Okay, thanks, Larry. Great to be here. Thank you very much for having me, sir. So the first chart that I've got up is the U.S. stock market. It's the VectorVest composite of the U.S. stock market, which is an equally weighted index of the 8,000 shares that we follow in North America. I think it's the broadest measure of the American market that I personally know of. And superimposed on that, I hope you can see those red and green triangles, which are a medium-term market timing system. We have a longer-term system in that, but that's the system that I use myself. It's based on three things. It's a technical measure. It's based on, the price itself. It's based on the momentum of the price, and very importantly, based on the breadth of the market. As you can see, we got a fairly decent signal right at the start of the COVID collapse, and we got a buy signal that's embossed in my subconscious, Larry. That was on the 6th of April, and this market ran up, and we got a sell signal. I think it was the 9th of September. And I actually cleared everything out there. I was really worried up there. And then we got another buy signal, a couple of weeks ago. I've been in a little bit here, but I've been very careful here. However, I think that we're probably poised for quite a bit more upside in this market. That's what my stomach tells me anyway. At VectorVest, one of I call it the secret weapon, Larry, because it's a tool that I haven't seen anywhere else. It's called the Comfort Index, and it measures, to work out what share to buy, it measures the trend of the share, it measures the volatility of the price plot, and it measures the fundamentals of the company. And if the share is trending strongly, with little volatility, and the fundamentals are improving, that scores well on the Comfort Index. So with one click, we can actually go through all 8,000 shares to find shares that are trending strongly with little volatility, where the fundamentals of the company are improving. And as I say, in my work, I call it the secret weapon. And I use it a lot for, I put together a very simple search on VectorVest, which combines both the Comfort Index, which is the trend, and forecast earnings growth. And what I'm looking for are the shares that are, in fact, trending strongly, where earnings are growing strongly as well. And I've just put a search together to find those out of those 8,000 shares. And I did that on the 6th of April. And that the top 10 out of that portfolio has outperformed the market by about 4x. And that's my basic search for finding shares. Now, I didn't hold them the whole way. I swung trade in them, did lots of swing trades on the way up with them. I would have been better off if I'd held them the whole way, but I didn't. I tried to get in, out, and then back in again using AB equals CD, relatively simple swing trading techniques. But very simply, you can put yourself in the winning side of the market. The key is the market going up? 2, you want to be involved in shares that are trending strongly, that are growing earnings strongly. And then you just need a fairly simple little window methodology of getting in and getting out. That's been an exceptionally good time for us this year. I haven't entered the last move up because although the market has been really strong, Larry, in terms of technical price action, unfortunately, the fundamentals don't come to the party. And Bart DeLito, who's the founder of VectorVest, who's essentially a fundamental analyst, he has a model that he's been playing with and working with for 30 years. And it looks at earnings, it looks at interest rates, it looks at inflation. And for the last 3 or 4 months plus, he's been saying that we are in a bear market scenario based on those three things at present. We have a situation.
David, could you repeat those three things, please, that Bart talked about?
Earnings.
I've had a request. Yeah. Earnings. Okay.
Interest rates and inflation.
Okay, great. Thank you.
And based on that, he has a model which values every share on the American stock market, every share in the London stock market. But he has an overall model that looks at the S&P 500. It's called the market climbing graph. And it has a 30-year track record in predicting bull markets and bear markets. At the moment, we have a market rising strongly on technical action. And unfortunately, the earnings are not coming to the party in the slightest. So it is fundamentally, we're in a bear market scenario. And that's why I'm very wary indeed about this market moving up. Nevertheless, my stomach tells me, Larry, that there's an awful lot more to come, and that we're going to see some form of the popular expression as a melt-up. I wouldn't be at all surprised to see that happening. So that is the S&P 500. The people who know my work, Larry, well will know that when they see a bar chart, that's something I'm trading myself. And when they see a candle chart, it's not something that I'm not trading myself, because I started with bars when I hand charted when I started in 1982. I don't think candles were around in 1982, but if they were around, bars are much easier to draw. So that reversal pattern last night was quite strong. That's what I call a 2-bar outside reversal. The market went down, took out, in fact, the last 3 lows, and then it reversed above the last 3 closes. So I like that as a reversal pattern, and I'm currently long of this thing in a small position, which I hope to add to if it goes my way. If it doesn't go my way, then I won't add to it. That is the overnight market, and that's a 4-hour chart of the overnight market. And I'm sure that you've been talking about this 62% retracement, where it seems to have found some support at a previous old high. And yours truly is long of it from, I'll tell you exactly, 3431, a bloody awful level, I know, but 3431. And I missed getting stopped out on that spike just after the open yesterday by a handful of points. So I'm still in it. And the last time I looked, it was at 69. So we'll see if it can take out. This is it's a Gartley pattern, I think. Many people will call it a flag pattern as well. And if we can clear these, I think we can get to, the last time I worked a target, the next target was 3625. So I think we can have a nice move up here.
Okay, can you stay with us, David? We've got another segment coming. Dr. David Paul. We'll be right back, folks. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direction's daily S&P 500 bull and bear leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back talking with Dr. David Paul, and I have a question myself. David, is your stomach indicator a proprietary thing, or can you tell us some of the things that go into it? It's just a basic nervousness that I have every day, or how do you evaluate your stomach indicator?
I just get a feel for it, Larry. Sometimes I dream about it, sir. Sometimes I dream about the things, but sometimes it's very difficult to know the difference between intuition and ego. That's for sure. But I've been at this now for a very long time, as you have, and hopefully I've got to the point where I can separate both. The momentum of the market is relatively strong, and certainly over the next, I would expect over the next few weeks, I think the stimulus is going to come. Whoever puts their name to it, the bond market is already saying that, I think. Over the last couple of days, and the technical picture here is very strong indeed. I think that this market will go much, much, much higher over the next 3 or 4 weeks. Then after that, I feel we're going to have a very, very difficult 2021. Very difficult 2021. And I wouldn't be at all surprised to see some form of deflationary period that none of us living have lived through. And I don't think that'll be good for gold either, because I think gold will go down with it. But sooner or later, they'll do their best to reflate again, and inflation will start to come, and that'll be very, very good for gold. But I think we're going to have quite a difficult 2021, where it's actually going to be difficult to find assets that are moving up. There will be great opportunities still in the stock market. Some sectors will do well, that's for sure. But at the moment, I'm reasonably happy with this position. I think the market is open pretty much where the pre-market was. I'd be surprised, take it one tick at a time, I'd be surprised if we didn't get to 3625 relatively quickly here.
That's a long way up there, 3625.
Yeah, that's where I think it's going to, based on the longer-term daily picture. Yeah, so we shall see. I'm very fond of the techniques of Richard Wyckoff, and I really like to put together price and volume. And this is a small electric car manufacturer from China, NIO. And I think it's probably the prettiest chart I've seen for such a long time, Larry, and that's why I put it on, because you can see that here price rose and volume rose, and then as it pulled back, the volume fell away. And then it broke out of this little triangle, pretty textbook little triangle, on really good volume here. And then it went sideways, and then it burst. Now, I bought into it somewhere about here. As my granddad used to say, Larry, every now and then the blind pig will discover the corn. But it's now going sideways again on falling volume, and that to me means that about 90% chance that it's going to keep going, this little share. So at VectorVest, what I try and do is I try and put together the direction of the overall market. I then look for shares with that are in a trend. I'm not trying to pick bottoms, that are in a trend, that have got strong earnings growth. And then I do my best to try and look for price and volume patterns. And when I put that all together, I'm getting hit rates of about 80%, which I've never been able to do before, by integrating three things: the general market itself, shares with really good growth characteristics, and then a share that's in a trend, and the volume picture. And that's Wyckoff's work. There's many people who sell very expensive programs trying to analyze Wyckoff's work, but as far as I'm concerned, if you see a share that's rising and rising volume and pulling back and falling volume, all is good. And if you see a breakout, it should go your way. Just getting your mind around that. Sometimes it's very, very difficult to see, especially on the Dow stocks. But on some of the smaller stocks, for example, Zoom, if you have a look at Zoom broke from 500 to 600, and it did that on rising volume. And prior to it breaking, it was in a little triangle where the volume was non-existent. So there was just no sellers around at all. Once it broke, anybody who wanted to buy it had to pay more for it. Simple as that. So you can't, in my humble opinion, you can't do too much on volume. And I also look at the volume of the E-mini if I'm trading intraday on the indices. That helps me a lot. Gold, sir. I think that gold, I did this just before the show, and I noticed now it's pulled back a little bit. I'm advising all our customers to stay clear of gold until it clears 1938. That's my level. And as you can see, there's a darn fib down here at 1825, and I wouldn't not at all surprised to see it pull back and run those stops before going again. But I'm hoping that that's not going to be the case. At the moment, gold and the stock market are moving hand in hand. If the stock market does what I think it's going to do, up to 3625 and higher, but not on this swing, then gold should move with it. A breakout of this pattern should take gold well north of 2,000, maybe 2,200 odd, and that would be really nice indeed. I have a position in the GDX, but I haven't bought into any gold shares as yet because I'm waiting for it to clear that 1938 level, which I think is important. So that's what I've been up to. Anybody that wants a 30-day trial of VectorVest will just go to vectorvest.com. It's completely risk-free. So it's been a very
you get 30 days?
It's a 30-day trial of VectorVest.
That's a pretty good. That gives you a good chance to look at things. And this time of the year with the election, that'd be a good time to look at it, I would think.
Yeah, 30 days you can evaluate it well. It's quite unique in that we're trying to get the best of both worlds. If you're a swing trader, putting together shares that are trending strongly, that have a proven history of growing money and making money, makes life a little bit easier. Certainly has for me. It certainly has for me. I was trading technically most of my life before I, in fact, found VectorVest, largely because I fought with the balance sheets and I lost. I just couldn't keep them under control, and there was just too much information. And then 10 years ago, I tripped over VectorVest, and now I found this tool that would do all that hard work for me. So fusing together the fundamentals and the technicals has done two things for me. It's improved my hit rate in the stock market, and secondly, and more importantly, it's improved the risk to reward. I still trade indices. I don't trade Forex nearly as much as I used to. If I see an opportunity, I will trade it. I traded the pound against the dollar the other morning during that saber rattling between the EU and the UK, and that was quite profitable. A nice little breakout trade based on, guess what, a Wyckoff spring, my favorite technique. The stock market's been very, very kind to us at VectorVest this year. Very kind indeed. I'm a bit worried about 2021.
Hey, David, that's 2016, 17, 18, 19, and now 20. It's awfully kind to you all the time, my friend. That's a hell of a program.
I'm worried about 21.
Me too. We'll worry about it together. How's that?
Yeah, how's it, mate?
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we certainly enjoyed having David on the line. He's always good to listen to, and he's certainly got a really good service there at VectorVest. Next week, we're going to have none other than Joe DiNapoli as our guest on the 28th of October, which is always a nice day. It's 3 days before the Halloween, I guess, which is good. All Saints Day, whatever your religion might be. But we want to pay attention to one particular price today, folks, and that price is $34 30 in the S&P 500. If we break below that, we're going to close lower for the week, and that's going to be 2.5 straight weeks down. So we're going to be very oversold coming into next week, coming into the election. And believe me, we're going to have probably a lot of things happening between now and then, so pay close attention. If you're fortunate enough to buy the bonds today or sell the euro, put your stops at break even, make the sign of the cross, or whatever you have to do to hope to get the thing in the right direction. And believe me, hope is one of the worst words you can use in trading. Just use your stops and don't worry about the hope. That's the main thing. I will have this 25-page paper from Tom Hugard probably within the next 10 days. I just chatted with him just about an hour ago, and he's going to get it ready for us, and you're going to love it, folks. It's a la Mark Douglas, and it's really, really good stuff. It's getting inside his head, and it's really amazing how he thinks, and that he thinks like a winner. Winners think how much money you lose, not how much money you make, and that's the whole thing that we're watching, and that's the whole thing. If you do that, you'll be far better off, and that's what we're watching. So I hope that helps, and live every day in an attitude of gratitude, and may God bless, and do something nice for somebody today, folks, that has a lot less than you. There's a whole lot of people like that out there. And I think it would be great if you did something like that. I know Sarah and I are going to do something special today. So try to do something, and it'll be helpful to everybody else. There's enough stuff out there to make you pull your hair out. And when you got so few that I have, you got to be careful.